Okay, so you know how it is these days. There's just so much information flying around, especially in crypto markets, right?
Mm.
It's genuinely hard sometimes to cut through all that noise and figure out what's really shifting.
Absolutely. It's like trying to drink from a fire hose sometimes.
Exactly. So today, that's our mission. We're going to do a deep dive and try to cut through some of that complexity for you. We're tackling this really interesting question. Is the crypto market actually moving away from Bitcoin's long-time dominance towards Ether? And maybe more importantly, if it is, why does it seem like so many people aren't really noticing?
That's the fascinating part, isn't it? The going unnoticed aspect.
Right, we've looked at recent analysis, some expert takes, some pretty interesting data points. And
Mhm.
yeah, the sources suggest this potential shift is happening, but kind of under the radar.
Mm.
And one analyst, Michael van de Poppe, he suggests a big reason might be something he calls bear market PTSD.
Ah, yes, that concept. It resonates, I think.
Like a lingering fear from past crashes. He even seems to agree with Willy Woo, the on-chain analyst, who thinks we're entering a state of Ethereum, basically.
Right, shifting focus.
So let's unpack that first idea, the bear market PTSD. It feels very human, in a very techie market. What does that actually mean for an investor day to day?
Well, it's essentially being psychologically stuck. Stuck, as Van de Poppe puts it, in the fact that the markets are bad, even when positive signs start to emerge.
It's like you mentioned before we started, like carrying an umbrella on a sunny day. Just could you remember getting stoked last week?
Exactly that. It's a perfect analogy. And this collective mindset, this PTSD, it literally stops people from seeing early signals, even if the data is pointing that way. It's a mental block.
So you might just dismiss good news.
Precisely. You see a positive indicator and think, oh, that's just a blip or it's a trap instead of, considering it might be a real trend starting.
Wow. So a lot of people could be missing out simply because they're, psychologically wired to expect the worst.
That's the implication, yeah. It's about overriding that fear, which is tough. But, okay, so if the psychology is one thing, what about the actual facts on the ground? Is there solid evidence for this ether shift?
Good question. Van de Poppe himself links it to bigger things, right? Macroeconomics.
He does. He points to the dollar getting weaker, potentially, and the business cycle starting to look up as factors driving this move towards an Ethereum market.
And Ether's own performance. Does it reflect that?
It certainly seems to be showing signs. I mean, look at the numbers. Ether's up, over 70% since its low back in April? That's pretty significant.
70%, yeah. But it's still down quite a bit from its all-time high.
True, true. It's still about 48% off that peak from November 2021. But Van de Poppe's point is that in recent months, we're finally getting into better shape. That recent strength is the key signal analysts are looking at.
Okay, and then there's that metric, the ETH-BTC ratio. We saw one analyst, crypto fella, telling their followers it's the most important chart. Why that one specifically?
Ah, the ratio. Yeah. It's critical because it measures Ether directly against Bitcoin. So if that ratio goes up, Ether's gaining ground, suggesting leadership might be changing hands.
That's something.
And lately, over the last 30 days, it is up slightly, about 0.33%. Now, okay, context is important. It's still down a lot, like 32% over the past 6 months.
So Bitcoin's still dominant longer term.
Exactly. But that recent uptick, however small, is what has people watching. Plus, you have other analysts like Ted observing Ether's current pattern looks a bit like Bitcoin's back in the 2017-2021 cycle.
Oh, interesting. Any predictions based on that?
Yeah, Ted predicts the real parabolic move will start once ETH breaks $4,000. So a key level to watch there.
Okay, so price action, ratios. What about institutional money, the spot Ether ETFs? That seems like a big deal too.
Huge deal. Absolutely. There's definitely promising momentum there. These US-based spot Ether ETFs, they just had this record streak, right? 19 straight days of inflows.
19 days. Wow. How much money are we talking?
About $1.37 billion flowed in during that streak alone. And get this, that's roughly 35% of all the money that's flowed into them since they launched back in July 2024.
So significant interest building up. And these are spot ETFs, meaning they hold actual Ether.
Exactly. Not futures contracts, but the real asset.
Yeah.
That's a much more direct pipeline for institutional capital into Ether. It really boosts demand.
And wasn't there something about staked Ether too?
Yes, good point. Staked ETH, that's Ether locked up to help run the network, hit a new high of 35 million ETH. At the same time, the liquid supply, the ETH available to trade easily, is going down.
Which suggests
Yeah.
less selling pressure, more long-term holding.
That's the interpretation, yeah. More long-term confidence in the asset.
Okay, so we have Ether's rebound, the ratio ticking up, ETFs pulling in money, staking looking strong, quite a few signals. But why does it still feel to many like Bitcoin's running the show?
Well, that's the complexity Van de Poppe mentioned, isn't it? The signals aren't all pointing the same way. It's not that clear-cut.
Right, like the altcoin season index.
Exactly. If you look at CoinMarketCap's index, which basically tracks if altcoins are doing better than Bitcoin, it's currently saying loud and clear, Bitcoin season. It's scoring really low, like 23 out of 100.
Even though Ether is an altcoin and doing better recently.
Right. There was a brief moment back in May, after Ether jumped like 42%, where the index got up to 43, almost flipping, but it didn't last. It fell back down. So that creates this tension, this conflicting picture.
And we saw some of that tension play out in the futures market, too. A bit of a wobble.
We did, yeah. The Ether futures premium, basically, how much more expensive futures contracts are than the current spot price, it actually turned bearish for a bit.
When was that?
That was when ETH price took that sharp 15% dive down to around $2,440. That dip apparently wiped out about $277 million in leverage long positions.
Ouch. So people betting on price increases got liquidated.
Yeah, forced selling, which pushes the price down further. It showed some definite nervousness. But interestingly, it recovered pretty fast. By the following Sunday, the premium was back above that neutral 5% level.
Suggesting what? Confidence returning?
Suggesting traders regained confidence pretty quickly, likely seeing that $2,400 level as solid support. So volatility, yes, but also resilience.
So putting all these pieces together, the positive signs for Ether, the lingering Bitcoin feel, the investor psychology,
Yeah.
what's the key takeaway?
Well, I think it loops back to Van de Poppe's point about what's needed for that altcoin season that we all are craving for.
It is.
Ether needs to step up. It needs to do better, show sustained strength. That's what could finally shake off that collective bear market PTSD and allow investors, as he said, to get out of our positions at break even or perhaps even make money. It really seems to hinge on Ether leading the charge.
So for you listening, what does this mean for how you understand the market? It seems like, despite some pretty solid evidence Ether's recovery, the ratio, those big ETF inflows, the overall feeling or sentiment is still quite Bitcoin heavy.
Right. And that's not necessarily a contradiction. It just shows how powerful things like that bear market PTSD can be, potentially hiding real opportunities, even when the numbers seem, well, pretty clear.
It really underscores that you need to look past just the surface noise, doesn't it? Delve into the data, the different analyses.
Yeah, definitely. It's about trying to see what's actually happening, not just what your gut, maybe conditioned by past events, is telling you, training yourself to see beyond the immediate sentiment.
Which leads to a final thought for you to maybe mull over. If psychological biases like this, bear market PTSD, can potentially blind investors to emerging crypto opportunities, where else might that be happening?
Yeah, in other markets,
Well,
or even other areas of your life.
Exactly. Where else might a similar bias be obscuring what's really going on? And maybe more importantly, how can you train yourself to try and spot it? Something to think about.